Hello everyone, and I welcome you to my video in which I will explain to you the accounting of cryptocurrencies under IFRS, International Financial Reporting Standards. My name is Mustafa, and I have published a master thesis here in Switzerland regarding the accounting of crypto assets in different accounting standards. Therefore, I have researched the right knowledge and information that I can share with you. So also be tuned for new videos if you want to understand the accounting of cryptocurrencies in the US as well. Well, I will always start and end my video with an essential quote. In this lecture, I chose Eleanor Roosevelt quote as she was the First Lady of the United States for 12 years. As also her husband was the former President Franklin Roosevelt, who was the president of the US during the World War II. Anyway, she said, "If life were predictable, it would cease to be life and be without flavor." This is exactly the point here. No accounting association or standard setting body like IFRS or all other associations of CPAs included crypto or digital assets or blockchain or DLT when they actually framed the accounting rules and principles for organizations and individuals, as these rules were already formed before the development of blockchain. In fact, despite the substantial interest of corporations, there is no accounting standard by a related government agency, accounting standard setting body, or even industry groups. That's why companies only rely on guidance to address concerns such as regulatory uncertainty, financial reporting, and legal compliance. Yet, the ISB has not established a different accounting standard in the International Financial Reporting Standards. But let's first give you an introduction to IFRS before we talk more about the accounting of digital and crypto assets. To understand IFRS, you have to first know the organizational structure. So we start from the top. As you can see, the IFRS Foundation Monitoring Board and then the trustees. Then comes the ISB that actually develops and amends international standards. It currently consists of 12 members, and they are chaired by Andreas Barko. The ISB aims to develop global standards and promote their use. However, we have also seen a new type of board next to the ISB, which was formed in November 2021, just a few months ago, and the intention of this new ISSB is to deliver comprehensive global baseline for sustainability-related disclosure standards that provide investors and other capital market participants with information about companies' sustainability risks and opportunities to help them make informed decisions. So by reaching comparable reporting by companies on climate and other environmental, social, and governance matters, so ESG matters. And we also got the IFRS Advisory Council, which advises the trustees, the ISB, and also the ISSB on its agenda and priorities. And last but not least, at the bottom we got the IFRS Interpretation Committee, which interprets international standards and provide guidance on matters that are not covered by the standards. So in this case, it's the IFRIC committee which actually developed guidance for corporations operating with crypto assets. So the IFRS or the IFRIC, they have already made several meetings after a huge increase in corporate activities related to crypto assets and DLT. As a result, in June 2019, the IFRIC had provided accounting guidance on applying IFRS standards for holdings of cryptocurrencies with similar characteristics to Bitcoin. However, the IFRIC guidance did not consider the characteristics of other crypto assets, such as security utility, CBDC, stablecoins that I have mentioned in my previous videos. In addition, the IFRS did not mention any accounting guidance for companies that issue new types of crypto assets through ICOs, STOs, or IEOs. Consequently, the four largest accounting firms worldwide, so what we know as the Big Four, they have all increased their knowledge and expertise in the DLT in order to advise their clients operating in this sector. And they could possibly advise their clients because IFRS is principle based. So all of them, they race together to take advantage of becoming critical consultants for companies operating with crypto assets, and they have developed a lot of guidance in order to help their clients actually understand the accounting of other types of crypto assets or under IFRS. To obtain decisive facts regarding the accounting of digital assets under IFRS practices, the IFRIC, they published a report to guide corporations on the accounting of cryptocurrencies, and by also adhering to the IAS and IFRS. And the IFRS Foundation has not formed any new standard for recognizing or measuring, presenting, or even disclosing crypto assets. So there is no IFRS standards that currently exist in IFRS targeting crypto assets. We only have guidance. And the IFRIC, which is the committee, they addressed this issue on June 2019 by publishing an agenda to support companies holding crypto assets or cryptocurrencies. A sample of 23 different standard setting bodies and organizations, they have all contributed to the final comments of the IFRIC. Hence, the IFRIC committee has certainly collected sufficient feedback to reduce or to issue this guidance for corporations. Okay, so IFRIC, first of all, they define cryptocurrencies, such as all the types of IFRS or IAS standards, they start by definition. And they have defined cryptocurrencies with three distinct characteristics. First, according to the agenda decision, a cryptocurrency is a digital or virtual currency registered on a DLT that requires cryptographic security, as most of crypto assets are. Second, a cryptocurrency is not issued by governmental organization, central banks, or any other parties. So as we know here, CBDC is not included in this definition. Lastly, a cryptocurrency does not set contractual rights between the holder and another party. So security tokens, utility tokens, or even asset tokens, they are not even in these definitions. Therefore, CBDC, NFT, security utility, they are all not covered by the IFRIC because of their underlying characteristics and rights for holders. Okay, what is the first thing that IFRIC was sure about? They said that the classification of cryptocurrencies does not meet the recognition of a medium of exchange or means of payment under IAS 32, which states that currency is a financial asset, serves as a medium of exchange to measure and recognize all transactions in the financial statements. This means that we cannot use a crypto assets to actually record the transactions in the financial statements. We cannot say, for example, assets are 100 bitcoins and then we can use the bitcoins as all forms of payment in the financial statements, like US dollar, euro, franc. So some holders still use cryptocurrencies as a medium of exchange for goods and services, like payment tokens or cryptocurrencies, for example. However, companies cannot use cryptocurrencies as the basis of all transactions measured and recognized in the financial statements. Therefore, the IFRIC, they said, and they concluded that holdings of cryptocurrencies, and please note, cryptocurrencies is the definition that has been provided in the previous slides, and they said cryptocurrencies under IFRS is not cash. Okay, second one, they even said it's not even cash equivalents, because cash equivalents are easily convertible into specific amount of cash at any time and are subject to only minor fluctuation risks of changes in value. However, we know for sure that cryptocurrencies are highly volatile because they are continuously subject to high fluctuation risks in value changes. Accordingly, the IFRIC has decided not to recognize the holdings of cryptocurrencies as cash equivalents. However, please note, there are types of crypto assets that are not volatile as Bitcoin or other types of cryptocurrencies, and we know them as stable coins and CBDC. However, they did not consider the characteristics of these types of crypto assets for this IFRIC guidance. Okay, they even said companies cannot recognize cryptocurrencies as financial assets because there must be a contractual right to recognize cryptocurrencies as financial assets. However, companies face difficulties in actually defining the performance obligations that are mentioned in the white paper of crypto assets or cryptocurrencies, or even the smart contracts that are being now used on the blockchain. They actually do not constitute the basis of a contract under IFRS. So some blockchain transactions do not grant the holder actually a contractual right to receive cash or a financial asset from the issuer at a certain point of time. Therefore, cryptocurrencies do not present an equity instrument of another entity, and the IFRIC committee, they have concluded that the holdings of cryptocurrencies do not meet the identified characteristics of financial assets. However, the IFRIC also has not referred to security and utility tokens that actually issue contractual rights for the holders when they have issued this agenda decision of cryptocurrency guidance. Okay, so what do we know? What did the IFRIC actually has allowed under IFRS for cryptocurrencies? The first one, they said that they permit the recognition of cryptocurrencies as intangible assets under IFRS, because companies can actually recognize identifiable non-monetary assets as intangible assets if they do not have any physical substance, meaning they are digital, like crypto assets. Therefore, they said that the holders can recognize cryptocurrencies under intangible assets. And they have justified the decision because intangible assets may be sold or transferred individually by the holder. In addition to that, they do not grant the holder any right to receive a fixed or identifiable number of currency units. So how the company should actually measure cryptocurrencies under IS 38, which is the accounting standard for intangible assets? Well, they should first initially measure cryptocurrency at a cost, and for subsequent measurement, they have the option to choose between the cost or the revaluation model. So the cost model, it basically allows the entity to recognize intangible assets or cryptocurrencies at a cost less accumulated amortization and impairment losses, which is mentioned in IAS 38.74. And also, on the other hand, the revaluation model permits companies to revalue the intangible assets using the fair value less any accumulated amortization and impairment losses. However, an active cryptocurrency market is necessary for entities to determine the fair value of level 1 or 2. And the IFRS or the IFRIC, they stated that fair value is a price that a company receives to trade an asset or pays to a liability in an orderly transaction at the measurement date. So in the context of DLT, the fair value is a price of selling and buying cryptocurrencies in the exchange market during the measurement date. Another accounting standard also permitted by the IFRIC for cryptocurrencies is inventories under IS2. However, this is the most important thing for the company to recognize cryptocurrencies as inventory. The main thing is that the company must hold cryptocurrencies for sale in the ordinary course of business. So if that's not their ordinary course of business, then they have no other options but to go for the intangible assets under IAS 38. So IAS 2 applies to companies that solely trade with digital assets for the sale in ordinary business courses such as brokers and exchange markets. So the IFRIC, they have guided companies in recognizing crypto assets following the definitions and characteristics under IAS and IFRS standards. However, actually the IFRIC did not include the characteristics of other digital assets in the agenda decision. Moreover, the IFRIC has not provided any guidance for the issuers of tokens. So the ones that issue new types of crypto assets through ICOs or STOs or IEOs. And they have also not addressed the financial statement challenges that actually arise from recognizing cryptocurrencies under their agenda decision. Since the IFRIC did not actually mention any challenges, there was no solutions provided. And this is what I have actually investigated on my master thesis through actually analyzing financial statements of publicly accessible companies that actually provide their investors with financial statements. So now I come to my motivational quote to conclude this video. The way to get started is to quit talking and begin doing. And it was said by Walt Disney. And this is exactly what the IFRS is doing by meeting together with several boards members to issue reporting solutions for companies operating in the DLT. Therefore, the ISB has a work plan for the next 3 to 5 years that they are going to start deliberations, collect feedbacks from experts, accounting associations, and local accounting organizations before they execute new guidance or maybe even issue a completely new standard for crypto assets or liabilities. So thank you for listening, and please subscribe to my channel to be tuned for new topics that I'm going to share with you. Thank you.